All right, we're going to warm up with hopefully an easy question. We're going to talk about what's hot and what's not, right? We've heard a lot about disruptive technologies, AI, blockchain, quantum, augmented reality. How do VCs look at those technologies, and what are you thinking of as the hottest ones on the market versus ones that may take more time to develop? Scott, I'll start with you.
You'd think I would have overly prepared for this, but I will tell you the answer that I'm struck with listening to you is where there's real machine intelligence, real artificial intelligence, there's some demonstrable proof that also understands empathy of the use case. There's AI that's getting better and better at understanding empathy, and then there's AI that's deployed for a purpose greater than ourselves where you have to have empathy to the person that it touches. And I would say there's so many good use cases I've seen over the past 5 years that I think you will now see the winning company emerge in the next couple of years by combining that empathy and that deeply technical data science.
Yeah, interesting. Everyone talks about the tech, but the human element is so important. Amy?
Yeah, just to build on that, I agree that there's a lot of opportunity as you start to combine the human element with technology enabling humans, right? Not necessarily a lot of people looking at it as overtaking humans or replacing humans, but I think it's an enablement is where we truly win. Definitely, I'm focused on the spatial computing, AR, VR, MR, all the R's. And just being able to imagine a world where instead of looking at a flat screen, we're always interacting in 3 dimensions as we do in reality. So that is really exciting to me.
It's exciting, and that's where you're seeing a lot more of the investing in your company around those immersive experiences.
Yeah. It's still early days, but you can definitely see that it is the next wave of computing.
Okay. And Neal, you talked to us, thank you. You talked to us a lot about several companies just now, right? As you think about lifting that a level up from the company itself, but the technologies, where are you seeing the most traction?
So it's interesting because we actually don't think about it from a technology perspective. We're looking at what it's doing. And it's never any single technology that's accomplishing the end goal. So for us, it's always the combination. But some of the areas that I think are really interesting, building on what both Scott and Amy were talking about, is we see a lot of fascinating things going on where these technologies and combinations of them are really augmenting the human in a way. So if you want to live in an immersive world, well, you have to have something on you, and you don't want something clunky on you. So enabling those very, very unobtrusive ways to provide that information to us and let us interact with it, or helping us if we're disabled, helping us get up and move in as inobtrusive way as possible. Those are the kinds of things where we see huge potential and huge benefit.
Yeah, which is interesting because that's what actually helps with adoption, right, is the unobtrusiveness and the ease of use. So looking for that as a key element is really insightful. How about you, Will?
So not 2 areas that I've invested in yet, but I think in terms of what's hot right now, what's happening in plant-based meats, so alternatives to meat are really fascinating right now, and to both all sorts of animal proteins right now. There's just an incredible excitement, I think, around that with Beyond Meat getting public and their astronomical valuation. I think a lot of capital kind of pouring into that. I also think space is really interesting. It feels like there's a lot more momentum there. I think that's an interesting and an area that's fraught with a tremendous amount of risk, obviously huge capital requirements, dealing with large governments, but there seems to be a lot of energy and a lot of excitement about that as well.
Yeah, so as a vegetarian, I really appreciate the Beyond Meat. And I'm fascinated by the ethical implications as well as the ability to feed the planet. So
yeah, it's amazing.
It's amazing. Right? And not necessarily technology-based, right? But true biology and chemically based.
Right, absolutely.
So interesting to find those new things. Great. Well, we've heard a lot of news recently about the disappointment about the pace of change sometimes, right? The Ford CEO said earlier this year that we think we've overestimated the arrival of the autonomous vehicle. Right? We heard a little bit about that in today's conference as well. Can you help us separate a little bit of hype from reality? And what do you think about that pace of change and adoption, and which ones are we seeing more traction and not with? I'll just open it up. We don't have to go in a line, whoever wants to go in.
So, I think part of what we can do is look at history, right? Like I used to work for a company called Akamai Technologies that helped us scale the internet. And I remember when I was there in 2000, we were building intense networks to enable streaming. No one really started streaming until 2006, and then we didn't do it on our phones until we got 4G years later. So if you look at that, you're looking at a decade, right, of change. But now we can't imagine life without it, right? So while we're in it, it seems slow.
Yeah.
But if you really, I think, take a step back, it's going quicker than
Yeah.
you know, again, maybe we'd like it to be faster, but it's a relatively good speed of change.
Okay.
I'll answer us a little bit philosophically. We always look back on history and we can't help ourselves but overly simplifying it. And it has already occurred and there are real facts, despite what others may say. And so we form a progression of a story. And most of us as humans then project that into the future and assume a similar straight line with just a little bit of variance. And in fact, I think we know much less about the future than we think we do. And someone who tells you they know a great amount about the future is someone with whom you should be cautious. You can, however, take kind of principled, in-depth positions on things that could be in the future and things that you would like to be, and make really large investments, you know, based on a level of hypothesis of, if true, what would need to be true, that we would live in a future where we would deploy capital and this would become true, you know, for our children or grandchildren. So usually when you see a conversation about, oh, it's all just moving so slow, I'm just so quickly reminded about how social networking was entirely dead and basically a spent space in 2003. There's just all these, and we could give you 10 examples that most of you in the audience know. So I choose to kind of be a little bit, to not have very good short-term vision and stay pretty dedicated to thinking 10 and 20 years in the future, not like I'm a futurist, but as in, if we have enough time to work through some gradations, what types of things are possible that we don't do today.
Great.
So I might just building on that. I mean, we had Ray Kurzweil speaking earlier, and he's been incredibly accurate about predicting when certain products would come on market. And he's been so successful with those predictions, I think primarily based on understanding the exponential growth of around the price performance of computing. And so to Scott's point, like if you can start to make some assumptions that these price performances curves are going to continue, if you know the price performance of solar is going to continue to improve, like, okay, what does that mean in terms of the types of products and services that might be able to be offered? I'm definitely struck by the duality of, man, it seems like there's so much that's happening so quickly, and yet we still don't have, you know, self-driving autonomous cars yet, or the drones that we've talked about. So a bunch of the stuff does feel like it comes a lot slower, and that's one of the real challenges with investing, right? Is trying to figure out what is that sweet spot. I mean, most of us have 10-year lives to the fund, and so especially if you're playing early, and especially, you know, if companies are taking sometimes longer to get out there and exit, creates some interesting challenges, right, around how when you want to get involved, when you really think the market's going to come to fruition.
Yeah. Neal, anything to add?
Yeah, I think that it's much easier to make predictions about when certain things are going to become technologically possible. With a set of very different issue when their adoption requires significant changes in either social organizations or the way companies organize themselves or the way certain ecosystems are organized. Those things change very slowly, and it's much harder to predict how and when those are going to shift. When I think about something like, you know, making war, fundamentally the way we make war today is the same as the way we made war 10,000 years ago. We just have better weapons. The way we govern ourselves is kind of the same.
Yeah.
So those things don't change. We're still people.
Yeah.
Just a quick last thought on that, though, is if it changed faster, as humanity, would we be ready for it, right? I think about things like AI and deepfakes and ethics and a lot of the, you know, virtual reality things. If it changed much faster, I'm not sure as humans we would be able to consume it in a healthy way.
Yeah.
So that's a piece too.
It is. It's adoption and our ability to consume the information and change with it, right? I think one of the AI speakers this morning talked about autonomous vehicles. You know, people have a perception of, oh, it's dangerous, or oh, it's going to kill somebody, or there's going to be an accident. But how many of those happen with humans, right? And are we far more accepting of human error than we are of computer error? And how does that change over time, which will be interesting as all these technologies evolve. Great. So let's talk about money. Everyone loves to talk about money, right? Let's talk about financing. We've had a few direct public offerings in Slack and Spotify recently versus the traditional IPO, right? Circumventing the traditional investment bank market. What are your thoughts on those different types of financing? What are you seeing in your own worlds as companies go to kind of cash out?
I mean, I guess to jump in, I mean, one of the things that really has struck me is the emergence of these super funds, right? SoftBank's Vision Fund, and the fact that you have, I think they're raising their second one now, it's going to be over $100 billion. What is that doing in terms of the delay in getting public and the access to, the checks that are being written are just astounding, right? So you see these companies that are taking much longer to get public, that are consuming much more capital, and maybe that's great. It allows them to be private and not have to operate in the public, under the scrutiny of the public eye, but also create some very interesting dynamics for investors and as they think about, again, kind of timing the life of their investments. And it's also obviously had some huge impact on valuations, right? We see this progression of all these different players at these different levels now kind of driving things up.
Yeah.
I thought that was super interesting.
Interesting.
Yeah.
Others on financing?
So let's,
Go ahead.
I mean, healthy, well-regulated public markets are historically just a really great facilitator of good allocation of capital. And there's a lack of being able to hide and play certain games. So I think in general, we should all be in favor that one of the choices to a growing, scaling startup is to have a realistic perspective on a capital market. And those open and close what sometimes appears to be kind of a whim that's hard to understand. I would remind us there's a moral hazard of being somewhere within an economic cycle where there's a tremendous amount of capital being deployed and at the entrepreneurial level, capital being spent that have actually not lived through a correction, much less of massive dislocation of capital markets. You can see it in the thinking of entrepreneurs that we engage. We are deep tech, deep compute, seed and Series A investors. And you really know the difference. And this is not a discriminatory comment. We back 22-year-olds, we back 58-year-olds. But you see a difference between the founder who's done it several times, including the way they stayed alive in 2009, or the way that they were really on cloud 9 and could not believe they're out of business 6 months later in 2001. So you see that in the decision making, and you see that in decision making. So where you see lemmings-ish behavior of not wanting to miss out on things, around that corner is behavior where they haven't maybe experienced that cycle before. So I'm very much for healthy capital markets. We are in a healthier capital markets environment as far as going public, even though at this set, most VCs have extended, okay, we don't go public in years 4 or 5, it's more years 7 to 10. But even within that, beneath the surface, I think there's some unhealthy allocation occurring.
Interesting. Anything else to add, Amy or Neal?
I mean, to Scott's point, I think there are pockets of the market that probably have more money chasing deals than might be healthy. And those typically are in the later stages when the companies appear to be somewhat de-risked, but they're still losing huge amounts of money. Those kinds of companies are still receiving huge amounts of money because there are these huge pools that have been raised. I think the area that Scott and I sort of play in is still a relatively underinvested area. At least that's the way we see it.
From an early stage perspective. So let's talk about venture capital firms themselves, right? And what disruption you see coming there. If we look back in time, in the 80s, VC firms went from a $3 billion to a $30 billion market, and then we had the crash in the late 80s, right? The 90s was the internet boom and the over-investing in the internet companies, and then we had the crash in the early 2000s, right? And one could say we're more stable now, right? Scott, as you indicated, but now the VC market is a $100 billion market. Right? What do you see happening in that market space? What do you see the threats to your business model, and how are you adapting to that now?
So what I'm seeing that I think is a positive trend is at least more diversity in the investing market. Slight growth, at least we were talking earlier backstage, in terms of gender and having more female VCs. At least from my network and just over the past 3 or 4 years that I've been investing, I've seen that grow. And I think that that's having a direct effect on the type of companies that are being invested in.
That's great. Others?
Yeah, I'm seeing a couple of things. So yes, to what Amy was saying, we're seeing a real gap in really well qualified seed invested companies if they don't meet a certain metric that a Series A investor. Of course, today's Series A investor is yesterday's Series B investor. We're seeing really interesting, really good late seed stage companies then struggling to raise an A. We're seeing Series A companies. There is in this barbell world, there's just a plethora of great capital and ideas and diversity at seed. There's now increasing kind of large, dynamic, and huge pools of capital that are later stage that will dip down for certain types of dynamics, like certain types of network effects where they feel like the model is already proven. But there are also, even in this environment, and I'm the one who just warned about the moral hazard of capital being too loose, even in this environment, you will see amazing technology with demonstrable technical proof and early signs of sprouts and green shoots struggling at the Series A and Series B. So even today, there's lots of room still for the discerning investor who is patient and takes a long view.
So one of the things that I'm struck by, and I think maybe is also behind some of the increase around the amount of capital that's out there, is venture has really become a global business, right? Over I don't know if it's 10 years, but dramatic changes, right? You look at the amount of capital that's being deployed in China, right? Or India, or throughout the world, really. There's so many very, very vibrant, Israel, I mean, so many vibrant venture startup ecosystems now. And so it's not just about Silicon Valley, which is really interesting, thinking about, okay, how do you continue to be relevant, get access to these really interesting companies throughout the world, and make sure that you have to be looking now way beyond, I think, Silicon Valley.
There's a little bit of a meme of San Francisco and Silicon Valley becoming a little bit kind of a metaphorical, professional college town. But I think there's some truth in that, in the sense that you come here for a period and an experience, and you need to return for certain reasons, but not a place that you lay down roots and that you repeatedly scale companies. And what I really mean by that is the capital appears to be continuing to double and triple down in its location here. But the investing of teams, my most recent investments are Houston, Hoboken, Toronto, Menlo Park, Cambridge, UK. I'm not saying every VC travels the same way or takes the same perspective, but I think you'll see more Shopify's. I think we are seeing the birth of not 7 or 8, but 20 or 30 geolocated clusters of real talent, scientific progress, college, university backgrounds, but where that CEO comes to Silicon Valley frequently, and where often the capital is here. This is obviously still a great place to build a startup in some ways, but in other ways, it's increasingly a real challenge here.
Yeah, it was interesting, right? Neal, you said you don't necessarily invest in technologies, but in the actual business model or the domain. And so in that topic, those domain expertise sprout up in different areas, right? And how do you figure out where those are, collecting the right talent, attracting the right ecosystem players, and then attracting the right capital? So it's a good play.
Yeah.
Neal, anything else to add?
Yeah. On your previous issue about the financing, one of the interesting things that's happened, at least that we see, especially in this early stage area, the Series A, the Series Bs, they've got scientific proof, they've got some early indications that things should come about well. While it's really hard to get financial investors in there, one of the interesting dynamics, I think this is over the last 10 years or so, is that a lot of corporate investors have become much more willing to take that early stage risk than historically they had been. Yeah. Now, that's not all of them. A lot of them still need, established revenues, et cetera, won't do things without a partnership. But there is an increasing number that have become much bolder in this early stage space. And many times they actually understand the technology and the impact that it can have in a much more profound way than a pure financial investor.
Yeah.
Do you all, pardon me, but do you all encourage your companies to take strategic money from corporate venture? I mean, I've seen that seems to be, I don't know, there's booms and busts to it, so there's some risks that go along. I don't know, I'd be interested to kind of get your perspective on, do you let them, are you supportive of a corporate strategic leading around or just participating?
So we had two companies that just announced Series Bs, both of which were led by Intel Capital. Okay. One thing that we do make sure of is that the corporate investment doesn't come with strings attached. And that's also something that the corporates have become much better at.
Yeah.
But we have several investments where the corporates are actually providing key value add through a technology partnership, and that's hugely useful.
Yeah. No, it's great. How about you guys? I mean, it's a great question, Will. I have the same thing. How do you work with corporates if you do, and what do you look for?
Yeah, so I came from that background. In fact, I was doing M&A at Akamai for about 10 years. So I think that there can be a solid strategic alignment between corporates, but I agree with you that we also recommend that there isn't any particular terms in the agreement that would allow them not to work with other companies. But yeah, it's definitely, I think I'm supportive, particularly because it could be, again, one method to exit.
I'm going to take the bait and be a little bit more negative in a way. But I think the locus of the point would be, what's the discussion with the entrepreneur about their expectations and the incentives? So Amy is raising a fund from some of the world's best LPs, and I will not hesitate to run through a wall to include her in a deal 6 months from now, because I know what that means. So I know her, but I know what she is signed up for to deliver over 10, 15 years with her LPs. With a strategic, the question is not only just who, but what is the corporate, like what's the current average rate of a CEO leading a Fortune 500 company today? I don't know the number, but it's much shorter than her long-term commitment to her LPs. So therefore, I'm a little bit more bearish on strategic investments the earlier that you are. Let's say you have a scaling Series B. So we're a large amount of capital, but our entry point is early. So I want to be clear about my context. Our check is into the company. We're on the cap table by seed or Series A. But we're a very large amount of capital so that we can protect our pro rata or even buy up in the B and the C. So we make a fair number of investments, but we really double and triple down on our winners. Some of them are hard, and some of them, there aren't people around. So in my example, when there are a number of Series B investors coming around, we in no way hesitate to welcome strategics, particularly if they're also bringing themselves as a customer or they're bringing some differentiated advantage or validation, absolutely. Whereas if you told me I had the most special Series seed advanced compute in, I'm trying to look for an example that's not accurate, but building a home hospital, I would say I really want them interested. I want them at the table for pilots and customers, but I probably want to be with 2 or 3 other deep tech and deep healthcare investors who have a similar 15-year view that I do at the seed.
Yeah.
Yeah, so I don't think necessarily, I wouldn't count on strategics being there for follow-ons. As long as you have that expectation, then
Right.
I think there's a difference in taking their investment.
Probably
But
like
yeah.
all of you, we love to meet the founders over time.
Yeah.
But if we're meeting them in a deal process, one of the first ways we can be helpful is we'll give our own perspective of, hey, here's what we think, understanding your company now, here's what we think are the most important questions you should be asking. And of course, the first thing we need to be is transparent in how we answer that. And you often find it's a much higher percentage of founders are not actually asking, hey, how do you support on the second and third check that might be needed here?
Yeah, it's interesting as we talk to folks too, it's not necessarily about the money because there are many sources of that. It's more about that access channel to market, unique IP around a specific use case that helps them get better versus the check itself, which is interesting. So we're going to have one last question and then we're going to break for lunch, which I'm sure everyone's anticipating. A year from now, we're all sitting back in these seats. Aside from the state of the presidential election, what are the hot topics? What are we talking about? What are we seeing in the market? Well, I'll start with you on that end.
I'm very bullish on electric vehicles, so partly through Kathy's insights, but I think we're really at a tipping point, and I think we're going to be seeing a dramatic acceleration in the number of EVs coming to market and just adoption that's going to be taking place.
Awesome. Neal?
I'm very bullish on where technology is getting inserted into our health system. I think there's huge, huge opportunities for change and betterment.
Got it.
Yeah, I agree with you. I also think virtual beings, some sort of a joint AI and VR, AR being that is created not only just for influencers and entertainment, but even in places like healthcare. I think we'll be talking about it.
Got it. Virtual beings. I like it. Scott?
Well, I'll say this with a wink, but I mean it sincerely. How about if we're talking about, wow, look at the new companies with this level of ambition created at the Global Summit in 2019. In particular, going after the
We'll pay him in the back.
No, going after this room is mostly investors and entrepreneurs, going after the sclerotic industries. So healthcare, exactly as Neal says, but also construction, education, government tech. Like there's some pretty massive spaces that SAS kind of took some shots at, kind of ran up against the wall, fell to the ground, kind of, like there's some deep tech, deep data plays in these sclerotic industries, and this is exactly the reason why great leaders like you host conferences here. So I think there's some new companies in the room.
That's fantastic. Well, fantastic. I have one more question because we do have just a little bit more time. And I'm going to end on a challenge as well as one positive thought, right? So what do you think is one of the biggest challenges facing these technologies from coming to market? And what can this team, this group of investors and entrepreneurs do to overcome that? So I'll start. Anyone who wants to answer it first. I know I threw it out there as a surprise.
So if you're truly deep tech and deep compute investors as we are, often the hardest problem is, even once true and validated, have you really thought with empathy about how you activate the customer and what does that motion look like? We can diligence all day long very early and actually know what technical risk we're taking, but can this founder, can this team unlock this hard, I'm looking for a good word without using the wrong one, customer? That's often the hardest problem. I have no easy answers.
Got it.
So for spatial computing, I think a lot about comfort, cost, and content. I think those are the three things that are going to be necessary for ubiquitous adoption. And those things are going to take a while. So in the meantime, I think we should focus on areas where there's a lot of as much return on investment as we can get, healthcare, enterprise training, leverage the web, and leverage mobile phones while we get the headsets and the other wearables in the right space.
Helpful. Neal?
I think the technologies are exponential and all work. I think the challenge is always when you're creating something that is producing a huge value shift. It doesn't start out with a market adoption curve that looks exponential because it actually starts really, really small. And it takes a long time before you actually start seeing a meaningful substitution into the sclerotic system.
Yep.
And it just takes longer than I think everyone expects. But you have to kind of be able to stay the course.
So I would maybe build on that with commenting just about how hard it is to build a company. And it's a brutal, brutal journey, the highest highs and the lowest lows in many ways. And I think just being, especially as investors, being able to empathize with the companies, the entrepreneurs that you are supporting, and making sure that they're doing okay and you're supporting them with more than just capital in the tough times that naturally go along with building businesses, I think is very important. Maybe what I would end on.
Yeah.
Awesome. Well, great. We heard a lot about having patience to stick with the long term, the human element, the empathy, the customer experience, as well as focusing on what's available now as we wait for technology to catch up with other things. So appreciate all of your time. Thank you all for your insights. It was wonderful. And thanks to everybody.
Thank you.